Hello and namaskar viewers, I am Sanjeev Pandya welcoming you to this week's edition of the Tax Talk with AJ. Tax Talk with AJ, the show gives you all the information that you really need to know about taxes. During the season, off the season, taxes are always going to be around us, and taxes play a very important role in our lives. So for personal taxes, corporate taxes, this is the show that you should be watching. And thank you so much for watching it. Thank you for your emails. Thank you for your comments. The show is brought to you by Science CPA Services, a professional accounting firm, CPA firm located in the state of New Jersey. Multiple locations, but they can assist you with any tax matter wherever you are in the USA. And all you need to do is that give them a call at 908-888-8900 or visit their website, sciencecpaservices.com. Their experienced and knowledgeable staff will definitely guide you in the right direction because Science CPA Services, the firm, believes in doing taxes right, and that's why they have the highest satisfactory rate among their clients in the USA. So, with that note, I'd like to welcome Mr. A.J. Kumar, CPA, MBA, CVA, a person who knows all about business and the taxes and the business valuation. With CPA for over 25 years, he joins us every week to guide us and to inform us about the taxes or matters which are related to the taxes. So with that note, I'd like to welcome Mr. A.J. Kumar. So good to have you show.
Thank you, Sanjeev. Thank you for the kind introduction.
You're very welcome. And kind introduction. Let's make it this episode very, very kind because something, we're going to talk about something. AJ is going to give us information about something which really you're going to like it, you're going to enjoy it, and you're going to look forward to it. And I'm talking about retirement. Who doesn't want to retire? Everybody wants to retire as soon as possible to have that money. But do you have enough funds in your retirement account? Can you really live on whatever you have or whatever income you're going to be getting? Would it be possible? What if state tells the employers rather to have that mandatory retirement fund for the employees? So that's added benefit for employees. And that's what we're going to talk about, retirement fund with AJ. So AJ, is it really true that New Jersey State has mandated for the employers to have that retirement fund for the employees?
Absolutely, Sanjeev. It's true. And the worst part is a lot of employers do not know that they are obligated to offer such a retirement plan to all the employees. There are conditions around it. The reason we bring this show today in this time, because a lot of employers are getting notices from the state right now that either they have to submit a proof that they have a retirement plan or explain why they don't have a retirement plan. And there are penalties around it. So we want to bring this information to all our viewers, especially the small business owners. You need to pay attention so you know your obligation. The obligation of knowing falls on the taxpayer, falls on the small business. You cannot really go back and say, I'm sorry, I did not know what I did not know. That's not how it works. But on a lighter note, before we start the episode, before you start working, when you're growing up, Sanjeevji, everybody is waiting for that first job. Everybody wants to start working, start making money. And soon enough, after you start working, you can't wait to retire. It's one of those things that you're chasing something that you are chasing only till the point you get it. And then when you have this job that's paying you, then you sort of start thinking, what's the purpose of my life? Is this what I was supposed to be doing? And that's when you start thinking about retirement.
See, the word is perfect, retire, right? When you are very tired, very, very, very tired, 100%. That's when you retire.
That's when you retire.
Exactly.
Now, the question we ask our viewers, and it's a thought-provoking question. We want you to think it through. We want you to think about it. How much money do you really need? When we are chasing this golden path, when we are chasing money in our lives, so we can retire happily one day, are we too late for it? How much money do we really need in that golden path before we can consider a comfortable retirement? What's comfortable? What's enough? How much money do you really need? So please think about it. There are a lot of articles on internet, a lot of articles on Google. If you go to my YouTube channel, you will see a lot of videos over there. But in a nutshell, the way you look at it, let's say if your life expectancy is 75. Today in America, average life expectancy is about 78 years. But it depends on your gene, it depends on your family background, it depends on a lot of factors. Sometimes if you have seen your parents, your grandparents, your great-grandparents living till 90, you want to plan till 90. If you have seen your parents, great-grandparents living till 60, 65, then I mean, you know what the gene you have. But the point is, if you are planning for 70, 75, that's a good plan. The way you look at it, if you are retiring around 60, 59 and a half or 60 years, you need funds for next 20 years. Let's say the retirement age is 78 and you want to leave some money behind. Let's plan till 80 years. So the day you are choosing to retire, till the date you have this life expectancy, you plan for 20 years. In your case, if you're planning to retire early, let's say if you're thinking about 55 years, then maybe you need a 25-year plan. If you're retiring at 50, God bless you, you probably need a retirement plan for 30 years. So the way you look at it, how much money do I need in a year? How much money do I need to live comfortably in a year? And if your number is 100,000, 100,000 it is. It's a different number for everybody. Some people can live happily, comfortably in 50,000 and some people need 200,000. But whatever your number is, multiply by that number by 20 years or 25 years or 30 years, depending on how much time you have after the retirement till the life expectancy.
Okay.
Meaning if you're retiring at 50, plan for 30 years. If you're retiring at 55, plan for 25 years. Multiply by the annual comfortable living expense. Let's say in this example, let's go with a high number. Let's say this number is $100,000 and you plan to be living for 20 years. Then you need $2 million. If you put $2 million on the side, this $2 million will keep growing more than the inflation. So you keep taking 100,000 out of it, you will never run out of money if you're living 20, 22, 25 years.
But to get to 2 million, it's a challenge.
You're 100% right. But that's not the issue here. For most people, the issue is they don't know when to stop. They don't know where to stop. They initially thought they needed $1 million. They had $1 million. Then they started chasing 2 million. By the time they got 2 million, they were chasing 5 million. And it's a never-ending race. We keep telling ourselves, one day I'll retire. One day when I have enough money, I'll consider the retirement. But we're trying to help you think through what the thought that we want to plant in your head. How much is enough? How much money do you really need? When you say enough is enough, I'm done, and I'll take a step back.
All right, interesting. So that is good to know. Now, my question to you is that this, which is mandated by New Jersey, first question, are there any other states in the USA they also have this retirement mandated for the employers, or New Jersey is the only one?
No, New Jersey is a follower, not the leader. A lot of states, most states, including our neighbor states, New York, etc., they all have some sort of retirement plan. The rules are different. So for New Jersey, the rule says if you have more than 25 employees, if you have less than 25 employees, right now the rule does not apply to you.
Okay.
If you have 25 or more employees, this is how it's written out. Then it's mandatory for the small business owners to offer a retirement plan to the employees.
Okay, so now when you offer, let's say you have 50 employees and you offer a retirement plan to your employees, does employer contribute anything to their retirement fund, or the money comes out employee's paycheck, and once the money comes out, where does it go? Does it go into state of New Jersey's account?
Well, right, there are several questions in this question. Let's take a step back. So the first question is, who is actually paying? Does the money come out of employer account? It's not necessary. As an employer, the business owners can choose to contribute some money, 1%, 2%, 4%, whatever you choose. For most plans to be considered qualified plan, tax deductible plan, you want to contribute 4%, 1% for each percent for the first 3%, and 0.5% for the next 2%. Meaning if the employees are contributing 5%, business must contribute 4% in order for this plan to be qualified plan. That's the general guidance. But as we are talking about the New Jersey mandated retirement plan, New Jersey does not mandate the employers to be contributing anything.
Okay.
In theory, if you have 50 employees in this example, you can offer a retirement plan where the business owners, the employers are not contributing anything in this plan.
So this is like a 401k, IRA, something like that?
It's very, very similar, and we'll talk about the differences and the pros and cons of 401k, solo 401k, or IRA. But the second question that you asked, where is this money going? Is this money going to the state of New Jersey? And what happens to this money? What's the guarantee that this money is growing or not going down?
I tell you what, where is the money going and what happens to the money? I think that is that's a key point as part of this episode. It's a very important information. So why don't we take a short break, and when we come back, we're going to start the conversation from that point onwards. Viewers, you are watching the Tax Talk with AJ right here on ITV Gold every week. This show brings you all the updates that you need to know about taxes and the matters which are related to the taxes, and such matter, retirement fund is one of the matters related around the taxes and for your benefit for your future. We'll be right back after these messages. Stay with us. Welcome back to the second half of the Tax Talk with AJ. The show is brought to you by Science CPA Services. Science CPA Services can assist you in all tax-related matters, personal taxes, corporate taxes, but they don't just stop only there. They can help you with the bookkeeping services, virtual CEO, virtual CFO. If you are a small to mid-sized business owner and you really need to focus on a business, Science CPA Services can take care of all your accounting and bookkeeping as well as payroll services also. On top of that, if you have IRS tax audit coming to you, then Science CPA Services can help you out, can really tackle the matter with IRS. Do not ignore that audit paper. Do contact Science CPA Services as early as possible. And third thing is that if you're thinking about starting your own business, then you really need to know that based upon your personal income tax bracket, which entity is good for you, whether it's LLC or C Corporation, S Corporation. These are very important things, because remember, at the end of the day, you want to save on your taxes, and the other important thing is you want to have your taxes done right, and that's why Science CPA Services is for you. 908-888-8900 is the number, and website is sciencecpaservices.com. In this episode, we're talking about retirement fund, which was known, earlier as in New Jersey was known as a simple retirement fund, something like that.
Well, yeah, they call it NJ Retire Ready.
NJ Retire Ready. Now it's NJ Retire Ready, but earlier it was called retirement fund or something like that. So here we are with Mr. AJ Kumar of Science CPA Services to continue that conversation. As an employer, 25 plus employees, you are obligated to be to enroll, to have your employees enroll into this retirement fund. Now the question that we stopped before the break was, where does the money go and what happens to that contribution?
Absolutely, Sanjeevji. So this plan is administered by the state of New Jersey. So New Jersey has hired a third party administrator. Plan administrator, we call it. It's called Ascens, ASCENSUS. Ascens is the name of this plan administrator. But forget about the name. The way you have Vanguard, Tierra Price, T. Rowe Price, Tierra Craft, Morgan Stanley, Merrill Lynch, they're all the same way. They're all the plan administrator. So you put your money in there, in that account. You have a lot of options where you want to choose. You can choose based on the age. I want to retire in 30 years, so plan it in a balanced way so I can retire in 30 years. You can choose to put it in stocks. You can put in mutual funds. You can put it in ETF, bonds, fixed deposit, money market account. Your choice. You decide. The plan administrator is charging a small fees, very small, minute fees, to the employees, not to the employer. So you pay a very small fees, but it's sort of a forced way to contribute some money. And the recommendation is 5%, the default that the employers are supposed to withhold unless the employee says no or want to change this number is 5%. By default, the money is supposed to go into the Roth plan. And we'll discuss what's the difference between Roth and other type of plan, traditional plan or regular plans. But by default, the money is supposed to go into the Roth plan, by default 5% into an administrator. The name of the administrator is Ascens, is hired by the state of New Jersey. It's a New Jersey retirement plan, and you have the option to choose where you want to invest money, and you have the option to keep it money there or move the money somewhere else. The question, though, we are asked, Sanjeev ji, so this is an employer-based plan. What happens if my employer changes? So this plan is offered by Sai CPA Services. What if I'm working with another company tomorrow? It's your plan. It doesn't matter who is offering this plan. You have the ownership of this plan as an employee. Wherever you go, you have the right to take this money. Let's say if you go to a big company and they have their own plan administrator, they are using Morgan Stanley. You can move this money into their account, or you can choose to keep this money here in this plan. But again, you have the ownership of this money. The employer cannot take this money from you.
Correct. Well, employee is the one, or the plan holder is the one that has full access to the plan.
And that's true with all sorts of plans.
Yes.
If you look at the 401k, 403b,
Yes.
457, IRA, SAP, all the plans have the exact same feature. The plan
Absolutely.
belongs to employee. The employer cannot take this money from them.
Good. And one thing you mentioned, which is also correct, that once you let's say if you decide to go to another workplace, you can keep the plan active, or when you go to other place, I'm sure you're going to find out whether they have a plan or who is the plan administrator and whatnot. You can transfer the funds over there. It's all easy and it can be done because everything is into your best interest, and they will make sure that everything is done as per your choices. Now, AJ, let's come back to the question you said a little while ago, that difference between Roth IRA and the other ones.
Absolutely, Sanjeev ji. So the plan, by default, you have the option to go into traditional IRA, even in this NJ Retire Ready plan, but by default is the Roth plan. The key of the Roth plan is when you contribute the money, you don't get the tax advantage now. It's after tax money. You don't have to pay the tax on the principal and the growth when you take the money out at the time of retirement. That money is tax free. But right now, let's say if you are contributing $1,000 into this plan, this $1,000 does not reduce your taxable income. On the other hand, if you choose to go with traditional plan, which you have the option to, but you have to select it, by default it's Roth plan. If you choose to go with a traditional plan, in that case, your taxable income now, this year, goes down by $1,000 in this example. But when you take the money out at the time of retirement, the principal as well as the growth, this $1,000 became $3,000 by the time you retire in 20 years. That whole $3,000, meaning the principal and the growth, they're both taxable to you in a traditional plan.
All right, very interesting information. Anything else that you'd like to add into this matter?
Absolutely. So, from an employer perspective, employers do not have to choose this plan only. The mandate says you have to have some plan. A lot of business owners like us, we have had the 401k prior to this mandate, prior to last year's mandate of this NJ Retire Ready plan. We already had the 401k plan in place. So if the employers have any plan in place, they are not mandated to have this plan as well. So the idea is you have to have a retirement plan. You can, if you get a notice from the state that we don't really see that you have a retirement plan, you can just submit the plan information that you have, your current plan, 401k, which you can have with anybody, that plan information to the state, and you don't have to pay a penalty. Second, a lot of people, a lot of small business owners are getting these notices right now that we don't have your plan information on file. If you get this type of notice, if you have a plan, please do not disregard this notice. Submit the plan information that this is what I have, this is what the plan number is, this is how we do it, and this is how it's being administered. Whoever is the administrator, please respond to that letter. Do not ignore that letter. If you don't have a plan, you respond that we did not know what we did not know, and we intend to put a plan immediately. For the first year, one time, they're allowing employers to give this excuse that we did not know, being the first year. But the plan is, if you don't have the plan even in the second year, meaning if you don't have a plan even in 2026, it is started in 24, so second year will be 26. If you don't have a plan in 26, the penalty is $100 per employee per year, which increased to $250 for the third year and the fourth year, and to $500 for the fifth year. So if you have 100 employees, you're talking about $50,000. I mean, it can be really, really significant.
There's no reason for employers not to have
That's the best part. As an employer, You don't have to contribute anything.
Correct.
As an employer, the fees is not coming out of your pocket.
Correct.
The fees is, and it's very small, the fees is coming out of employee's pocket.
Yes.
It's optional. It's not mandatory, but you have to offer it.
Okay. All right. Good. A couple of key questions. When an employee leaves one job, goes to another job, money is transferable, no problem. What if someone leaves New Jersey State and moves out of state and goes somewhere else? What happens?
It wouldn't change anything.
Okay.
So a lot of these companies, including Essence, Morgan Stanley, Merrill Lynch, Vanguard, T. Rowe Price, Tiara Craft, they're all multinational
nationwide.
companies. They're all national company, multinational rather. So you can be living anywhere. Your money is there with, in this example, let's say Morgan Stanley, Merrill Lynch, whoever you have it. You can take this money out in India. It doesn't matter. It's not limited to the state of New Jersey or, for that matter, even in the United States.
Or do you transfer wherever you want to transfer? Once you move out of state, out of country, you
whatever
transfer
administrator
wherever.
you choose. Whatever administrator you are, and there are like 40 of them.
Yeah. Okay.
You decide.
Now let's clarify one thing. This is the retirement plan, viewers, and for employees. This is their financial security, which government wants you. I mean, they're mandating because it's for your good. Because it has happened in this country that when people retire, sometimes they have no money after retiring because they work, throughout their life and they use the money. They live paycheck by paycheck. But this is a financial security for yourself, for your family, that once you retire, you will have certain money, parked somewhere in as a savings. But AJ, let's give them a clarity that this has nothing to do with Social Security.
Absolutely. I'm glad you asked. So this is not a social security plan. This is a private plan. You contribute into this plan. If you don't contribute, you don't get it. In social security, the rules are very different. You have worked for 40 quarters, even though you don't have a separate plan, you still get some social security benefit. You did not contribute, your spouse contributed, you still get some survival benefit, some social security. So please do not confuse. You can have this money in addition to social security. It has nothing to do with social security. Two different plans. Social security is basically a government plan, which we have been talking about for the last 10 years, last few years, that the social security amounts can go away, can go down. But this plan amount cannot go away, this is your money that you contributed to a private plan. Whatever you contributed, it belongs to you.
Okay. All right. Very well. Thank you for clarifying that. And the viewers, we sincerely hope, AJ and I hope that you found this information very useful. The Tax Talk with AJ every week brings you all the information, tax-related, business-related information. And for your knowledge and, for your betterment, we bring this information to you. And we are so thankful to Science CPA Services for sponsoring the show so that way you can be educated, because taxes can get a little complicated. And there are many other tax-related matters, such as this one, can also be complicated. So this is for you to understand what's going on. And for more information about your taxes, retirement, payroll services, bookkeeping services, anything, you can give them a call, 908-888-8900. They're experienced and knowledgeable CPAs on hand. This is a one CPA firm that they have multiple trained, certified public accountants, CPAs on their staff. They'll guide you. You can have a meeting in person. You can have a meeting over the phone. You can have a meeting on a Zoom. All these options are available. Visit sciencecpaservices.com or give them a call at 908-888-8900. Do not ignore that. Do it as soon as possible. With that note, I'd like to thank Mr. AJ for being here in the show and for guiding us and informing us week after week. Until we meet again, same place, same time, I am Sanjeev Pandya, wishing you all happy and tax-free and looking forward to good retirement days ahead. So long.
Thank you.